Hey, this is Brian Briscoe, your host of the Diary of an Apartment Investor podcast. Coming to you today, it's still January. Today I wanted to talk about a couple of things that new investors can do to take advantage of the market conditions in 2024. I saw somebody put like a doom and gloom post on LinkedIn today, and I had this topic planned out before, but let's hit that post. He basically said, companies are laying people off, AI is taking off, which is going to replace a lot more jobs. Put a bunch of doom and gloom out there. And then he said the optimists are going to take over the world because the optimists are the guys that are going to keep on going forward. There's lots of reasons to be a little bit pessimistic about the real estate industry or the state of the multifamily industry today. But honestly, I think right now is probably where you're going to find the best deals in a decade. So to be honest, 2023 was a very difficult year. And as we start 2024, it is still a difficult time to begin a multifamily investing journey. All right, we've had unpredictable lending. The rates have skyrocketed over the last couple of years. And until recently, you never knew what would happen to the rates. You never knew if rates were going to go up a full percentage, between the time you got a property under contract and the time you closed. And, that put a lot of stress on your numbers, had a lot of people backing out of contracts, a lot of people asking for financing contingencies, a lot of people losing money, to be quite frank. And that's supposed to push the multifamily prices down, and it did. I think overall prices are down 15%, but the people who don't have to sell right now are very plain and simply not selling. And that creates the issue that we're in right now. Okay, not a lot of sellers out there, so it's harder and harder for buyers to find places. Okay, so what do I think is going to happen in the near future? 2024 has come in. The Fed has said that they're probably done with rate hiking. We are getting economic news that looks bad if you're looking at the economy, looks good if you want rates to come down and multifamily prices to go back up. But we are seeing things change, which should indicate that rates should come down. And looking at what has caused prices to drop 15 to 20% on apartments nationwide, we should see those prices to go back up, because the only thing that made those prices go down was interest rates. I mean, when interest rates went up, less money was available, and with less money available, there wasn't fuel thrown in on that fire. So as interest rates go down, more money is going to be available, more money is going to go in, and that's going to add fuel to the fire, and it's just going to keep on going. So with that situation, what do I think that means? I think that means that we are pretty close to the bottom of, this little market cycle. Like I said, since March of 22, when prices supposedly peaked, that's at least what most indices say, most prices have dropped 15% in most metros. Some areas, some metros, it's a little bit higher, other areas a little bit lower. But long story short, I think we're right about the bottom of where that drop is. And with rates potentially coming down soon, or at least not going up more, I think we're going to see that go back up. So what's one thing I think new investors can do right now? Go for the best deal available. Now, you're never going to get a perfect deal. Even 2020, 2021, it was the opposite. There were so many offers out there that if you underwrote conservatively, you would never get anything under contract. Okay. And that's the truth that a lot of people just won't tell you. If you underwrote conservatively in 2020, 2021, and 2022, you would not get anything under contract. So you had to be a little aggressive. Well, guess what? That's kind of sort of what you need to do right now, is get a little bit of aggressive. Now, here's my take. I think prices are going to come back up. Okay, so if you buy a property, if you get a property under contract today, end of January 2024, yes, prices, you may have to overpay right now for what other people are willing to do. But here's the deal. If I'm right and interest rates do start going down here soon, and prices do start going up, what you buy now, you're basically going to get the same price on it in 6 or 8 months when the rates go down and prices start coming back up. So go for the best deal available now. And speaking of the best deal available, I've got a really good deal for you. What I've created is a deal tracker. Now, what I mean by created this deal tracker, I created it quite a while ago. It's what Streamline Capital Group uses right now. And it's a tool that we use every single day. Well, now, okay, weekends not included. I'm exaggerating a little bit, but it is what we use day in and day out for our acquisitions. Okay, once a week when we are on our pipeline call, it's that tracker that we pull up, we look at, and that's basically the tool we use to make sure we're doing all of the right things. So when we start talking about going with the best deal available, if you don't have a tracker like that, I'm going to give you mine. Just going to let you download mine. So what we're going to do is we're going to put a link to where you need to go to get that tracker. It's going to be at thetribeoftitans.info/deal tracker landing. Okay. Yeah, it's kind of a weird URL. It's a landing page, but I'm going to give you that deal tracker. All right. I wasn't going to throw that in the podcast till later, but I just realized that it just fit in so nicely right here. It was something we were going to release, next week on the podcast. But long story short, got off topic to give you a free offer, a free deal tracker. It also comes with a video to show you how to take advantage of that deal tracker. But anyway, back to the subject at hand. Sorry for that tangent. Go for the best deal available. All right. Look over everything that you have in front of you, what all the brokers have sent to you. Look at what you can reasonably purchase as far as capital raise goes, and make an offer on the best deal there. Like I said, you're going to have to get a little bit aggressive to get something under contract. Now, I think the difference between now and 3 years ago is right now you're going to put in 4, 5, 6 LOIs to get one accepted, because the owners are going to look at the price and say, yeah, we're going to hold for a little while. And those properties are going to persist and continue to stay on the market. 3 years ago, you had to put in, 5 or 10 LOIs to get one deal under contract, because there were so many other people putting the LOIs in. So what I really want to tell you is, yeah, it may seem difficult, but it's just a different kind of difficult than it was 2 or 3 years ago. That's the truth right here. All right. So tip number 1, go for the best deal available. And to help you do that, we've got that deal tracker that we're giving away, thetribeoftitans.info/deal tracker landing. And that's short for deal tracker landing page, but that's as creative as I get. All right. Tip number 2, build relationships with brokers. 5 years ago, 6 years ago, it was 2018. So it's been almost 6 years since I started this journey. When I would pick up the phone and call a broker, it was like I was getting interrogated or asked 20 questions. And they were always sizing me up to really determine if they were going to talk with me again. Well, that part hasn't really changed. The brokers are still going to make sure that they're not going to waste their time with you, but they are a lot more open to working with new investors right now than they were in the peak of things in 2021, 2022, right? So that's an advantage you have. All right. Why are they more willing to work with you? Well, 2023 was the lowest year for transactions in a long time. And so a lot of these brokers, guess what? They live off of their commission checks. And since they haven't been getting commission checks, a lot of brokers are starting to get desperate. Okay. They're starting to say, okay, I just want to talk to somebody who's interested in buying things, and, let's get this deal under contract and hope they close, right? So right now is a great time to reach out to brokers. Okay. Now, something that I am working on that will be coming out in a little while, it's going to take me a while to compile it, is a toolkit for people to get everything they need. And inside this toolkit, I'm going to have like a script to use with the brokers, and kind of a checklist to use to make sure you have your ducks in a row before you talk with the brokers. All right, to save you a little bit of time, to save them some time, and to make the calls more productive. So stay tuned. That'll be coming out. All right, next thing, similar to building relationships with brokers, it's a really good time to build relationships with investors, okay? For the same reasons. There's a lot of people out there, there's not a lot of deals. And there's a lot of people that are reluctant to invest right now. So start building your relationships now. And so when things start heating back up, you'll be able to raise the capital. All right. Now, I will caveat these last two by saying building a relationship with a broker and building relationships with investors is not going to help you if you never put a deal under contract. So you need to be actively searching. You need to be actively trying to find deals and maybe get slightly aggressive on your underwriting. So keep building that investor list. Keep looking to make more contacts with more and more investors. Next thing is you have to seek flexible financing. Okay. I think interest rates are as high as they're going to get. We have a loan right now that's at 9 point something percent. It's a variable rate loan that we locked in. When we locked it in, it was like 8, but the rates have gone up a little bit. We're trying to refinance out of that because it's a relatively high rate. Any loan you get right now, I think, is going to be at a relatively high rate compared to where rates are going to be 2 to 3 years from now. Now, obviously, I'm looking into my crystal ball and making some projections, but the Fed has said the federal funds target is about 2.5%, which is almost 3 full points below where it is right now. SOFR this morning was at 5.3 something, so we're looking at almost 3 full percentage points below, 300 basis points, if that's what you like talking about, below where rates are right now. So if rates come down, the last thing you want to do is have a loan that has a ridiculous prepayment penalty, okay? Yield maintenance or a high step down, okay? So what do? Try to get a loan that has no prepayment penalty or, a prepayment penalty that dies down really quickly, or have cash in the bank to pay for that prepayment penalty, right? So basically you want to be able to refinance out of the loan that you get right now as soon as you can take advantage of lower rates, okay? You also have to make sure that loan works right now, because if it doesn't, you're not going to be able to last long anyway, okay? So find a loan that works now. Okay, get some flexible terms on it for the exit and let it roll. All right, last thing, you got to be able to move quickly. All right, if you are underwriting deals, if you're looking at everything that's coming out in the market that you're looking at, you're going to pretty soon get your finger on the pulse and you're going to intuitively know what a good deal looks like. Okay, so when you see that good deal come across your desk, all right, you'll be able to pull the trigger and you'll be able to move at a moment's notice. Okay. So all that said, there are going to be deals out there. When you see the right one, be ready. Be ready to go. Be ready to submit that offer. Be ready with that earnest money deposit. So if you're putting offers in, you're going to have to put 1 to 2% earnest money down. Have that money or have somebody with that money available. Have your investor list. Have your potential partners. Okay. Be ready to move at a moment's notice. And when the market's not moving very fast, now is also a really good time to start assembling that team and getting everything ready. All right. That's it for today. Once again, there was that free download that I'm offering, the deal tracker. What it's going to come with is the actual tracker. And once again, it's the same tracker that Streamline Capital uses. All right. We did put some different coloring on it to make it look pretty, and it's got the Tribe of Titans colors on it and the Tribe of Titans logo, which, I think it looks awesome, but it is the exact same tracker that we use, okay, minus the colors. All right, but to get that, the tribeoftitans.info/deal tracker landing. That's where you want to go. And we're going to have that link in the show notes as well. Go to that webpage, download your deal tracker now. It's really going to help, I promise you. And we'll see you next time here on the Diary of an Apartment Investor podcast. Take care, guys.